Welcome to the Trading Bell. We have set camp right here at the office of the Kenya Bankers Association Acting Chief Executive. That's Raymond himself. He's right here next to me. We want to discuss what to expect. It's D-Day. Tomorrow, I don't know what's going to happen, especially when it comes to matters finance bill and much more, especially on some of the services that have come out and some of the recent launches. Catch this conversation right now. Welcome to the show.
Yeah, thank you, Maina, and welcome to KBA.
Thank you so much. First, let's dive in straight. Kenyans are now wondering what will happen out next. You were there pushing the agenda on what you felt were pain points, and I wanted to ask you, you have sat in these committees, you have spoken at large, I've seen you several in those particular corners. What specific arguments are you pushing to the policymakers, or have you pushed to policymakers to support this reconsideration? Because you're talking about reconsidering some of the, especially impositions of VAT, 16% on financial transactions and all. What are some of the considerations you're looking at?
Yes, this finance bill 2024 actually presents very significant changes within the financial landscape. So what we've seen is there's an introduction for the very first time of VAT on financial services. And then also there's the aspect of increasing excise duty from the current 15% to 20%. Now, what this means is we are moving from 15% tax currently to 40% tax. Very significant 25% increase. And what this does is it increases the cost of doing banking, formal banking. And you know, this applies to even very basic payments. So when you're doing your shopping, grocery, when you're going to the supermarket, when you're going your matatu, you're paying mobile banking or even mobile money. This excise duty and VAT will actually be able to apply. You're paying for school fees, you're paying for e-citizen. And you know, government actually moved all payments to e-citizen. So we have no option. Even this one actually, for the matters banking, for e-citizen, we will not have the option, because for e-citizen you have to pay through either mobile banking or through formal banking transactions here. So what happens is that as you do your transaction, KRA applies excise duty. So when it moves to 20, if you are doing a transaction of, let's say, you're paying school fees for 10,000, 15,000, the bank will charge you average 100 shillings. So with these two proposals, the excise duty moves from 15 to 20. So that means that amount of 100 shillings moves to 120. Then now you put VAT on top of that, it moves from 120 to 140. So that's a significant jump that you're actually indicating that this will make formal transactions very, very expensive. And this leads people to options. Now, looking at this whole conversation on VAT, why VAT? Because VAT, in the very essence of it, and even the definition, it's value-added tax. So you're adding value to that transaction that's actually happening. But here, I'm paying for my patient in hospital. So from my account to the hospital's account, I'm just moving 15,000 across from my account to the hospital's account. That money that has moved 15,000, there is no value addition. There is no? Yes. So what we're just doing is we're moving money, and the little 100 shillings that the bank gets as charges is just actually a cost recovery on having to facilitate that particular transaction. Again, when you look at the law itself, the VAT law, it says it will apply to services and goods. And then it goes ahead to be able to define what a service is and what goods are. And it is very clear, because it says money is not goods, and then also money will not apply to services. So we're even wondering, when we come to even the implementation of it and even the definition as to this VAT, as to exactly what do we mean when we're applying VAT. And I'll surprise you in that we've done our research through these discussions, and we've also had discussions with the Finance Committee, which were indicating that Kenya will be the very, very first country in the world to actually apply these two taxes together on financial services, both excise and VAT. Because all over the country, they choose one. Either, most of the countries, they go for excise duty. Very few countries have gone for VAT. But those who have gone for VAT, it's just VAT alone, or excise duty alone. So that's the dilemma where we are, and we are still pleading, even as the committee retreats, to be able now to look at our submissions, write the report. So we are still pleading that they can be able to relook at this, not to be able to make our transactions very expensive.
Yeah.
Because we moved a journey where we have pulled individuals and businesses to formal transactions, and this helps government in a very, very big way, because government is able to generate revenue when we are doing our transactions through formal channels.
Okay.
But when we get to cash, then actually the government will be the biggest loser here, because they lose on this excise duty, and then also they lose on even the corporate tax, because when these transactions move away from banks, even banks' revenue will be affected. So even the corporate tax goes down, the excise duty itself goes down. So that's what we are saying. Let's look at the numbers and be able to relook at this. Make transactions as painless as possible. Then we'll do many transactions in a day without having to fill it.
Absolutely.
And yes, just to mention lastly on that point is an issue of the lowest earners, actually the ones who will really feel the impact,
the low income earners especially,
because they do many transactions during the day. Unlike some of us, we do our budgets either twice in a month or once in a month. So that transaction is just one. But the person whose income is low, because now you have to do your daily supplies on a day-to-day basis, all those small transactions, VAT and excise duty will apply. So they'll actually be bearing the burden of these increased taxes more than the people who do transactions just once in a month or twice in a month.
Wow. Speaking of the same person, same category of low-income earners and especially small businesses, I see a great impact on that. And I think you've alluded to a part of it where you've said we might see people shying away from formal ways of transacting, probably to try as much as possible save a coin. How do you think this will affect the financial inclusion efforts in Kenya that you have already strived to achieve so far? And what measures can banks take to mitigate this now?
Yes, when you talk of financial inclusion, what we just mean is we make it easier for people to access financial services. We also make it affordable for people to access financial services. And then also we dignify when you are doing the financial services. Because remember, we are coming from an age where even for you to open an account, you are told you need guarantors, you need references, and then also there was the aspect of you have an account, you have to maintain a particular limit within that particular account. Again, loans were unheard of for particular segments of our society. So we moved from there to this stage where at night, during the day, anywhere, I can actually be able to access a loan facility from a bank. I can actually be able to transact. And I'll surprise you, because for small businesses, like Mama Boga, Boda, they actually access these loans on a daily basis. So somebody will wake up very early in the morning, be able to get funds on mobile loan from the bank, go buy supplies, like Mama Boga, go buy the supplies in the morning, then sell off the stock during the day and be able to repay the bank in the evening. And that's a daily journey, same day journey. Boda, you wake up, you have no fuel in your motorbike, you actually go to your mobile phone, be able to get a loan and fuel your bike and be in business for the day. So this moves us away from that aspect of being able to be stressed, looking for friends, neighbors to borrow some few coins here to restock or even get fuel for your bike. So that dignity. And then also with financial inclusions, when we're doing our transactions formally, what happens is the bank is able to study your behavior with the transactions and even the level of transactions that you're doing, and be able also to measure the amount of credit that actually can be extended to you. So when we move out of these channels, then again, banks will not be able to assess appropriately as to how and how much somebody can actually be able to access through digital channels or even through formal applications here. So the data that we get through these formal transactions goes a long way in this financial inclusion. And we moved from lows of 26% to 83%. That was in 2021 when we did the last survey. 26% was in 2006. So it has been a very, very good momentum and journey. And even we had a meeting with the governor yesterday, and the governor was saying that the next report on FinServ, that's Financial Inclusion Survey, is actually coming out in December this year.
Okay.
So what we'll be looking at is be able to see how much have we been able to move from the 83 up to now.
Okay.
But with these taxes now, we reverse that, because now when you go back to the informality, we mix it up, then now we lose it out, because as banks, the transactions will move out. As government, again, taxes will actually be affected negatively.
You're right. And listening to the government side of things, they're talking about our debt positioning, all those things, and they need to raise revenues and all that. And sometimes you wonder, I'll be asking you for what you think should be proposals on that. But before I get to that, let's talk about some of the economic implications of VAT in some areas that have been suggested. One of it is especially on FX transactions. And there has been a proposal to introduce VAT on those foreign exchange transactions. Could you elaborate on those potential risks? First of all, for just the general economic implication and the Kenyan shilling.
Okay. Now, when it comes to putting VAT on foreign currency transactions and forex in general, it actually also brings a very interesting conversation, because looking around the world again, no country actually puts VAT on the forex transactions, because it's an area also you touch on the forex transactions. You touch on your local currency rate. So what you're looking at is our exchange rate for the Kenya shilling will be impacted if we apply the VAT on those transactions. And it's whether, and even the law, the way it has been crafted currently, the bill, the way it has been crafted currently, it's not very clear as to exactly where that VAT will be applied. Because they're not saying we're applying it on the fees, or we're applying it on the commission, or we're applying it on
the volume,
the volume, or even the spread that banks do here. Because for banks, banks don't charge fees, we don't charge a commission. It's only a spread. So that margin, again, if we apply VAT, it will be double taxation, because that margin we pay corporation tax on it at 30%. So when you apply VAT, it will mean actually we are doing double taxation on that area. So that affects our shilling. That also has an impact on our inflation, and that has an impact on the interest rates, because you know interest rates for banks are determined actually by that exchange rate, the inflation within the country. So we're looking at those three things, and we've just gotten out of it in March, because all along last year we were in this trouble where we had shortage of dollars in the market. Inflation was high up. So that's something that we don't want to be able to reverse and get to that particular hole again. And then we're a net importer.
Importers, absolutely.
So when you apply
I actually had a statement, sorry to tell you, I had someone say, someone significant say that we're still also importing groundnuts.
Exactly.
I was shocked, but go ahead.
Exactly. So we're a net importer, including the very basics that we think, so our grains are all being imported in, and you saw what happened in Ukraine. Then we said, hey, we can't get our rice, we can't get our grains, so we are net importer. And then also even the few exports that we move out, again, the bill as it is, it's not exempting anyone, whether you're importing, whether you're exporting. Yes,
either way,
the tax will actually be applicable on that. So we price ourselves out of our regional market, our commercial market, and even our global market. And that's what we're saying, let's stabilize our economy. Let's be able to also look around as to, because we are competing with other countries within the region. We are actually not an island on our own. So what other countries are actually doing are very, very careful on issues which affects exports, imports, and they're managing them a bit in a very cautious manner, unlike what you're doing now with our finance bill here. So on that, we just continue pleading that we need to relook at that, so that we don't price ourselves out of the global market.
Wow. We're going to take a short break. We're taking a break right here on the Trading Bell Show. Matters Finance Bill and what to expect. We'll be right back. Welcome back to the Trading Bell. We just had a conversation on what to really expect on the finance bill and what propositions the Kenya Bankers Association is pushing, and we are proceeding on with the conversation. And Raymond, thank you so much for joining us again. And you had just banks release their Q1 results. We saw good performances here and there. I also noticed a bit of the NPL ratio has gone up a little. And now we are about to tax more. I don't know what to expect, especially on the loans and all that. I just want to give you a general comment on what you observed on Q1 results and even just on the NPLs.
Yes, the industry as it is currently, it's very stable, quite strong and resilient. And that also be able to associate it with prudent management of the sector, and then also thanks to our regulator, because we've actually been able to work with the regulator quite hand in hand, and even talking of Forex, because that challenge of Forex was actually resolved because of the close collaboration between commercial banks and the Central Bank of Kenya. So looking at Q1 results, yes, it indicates the sector is actually performed well, and that also just is a parameter of the general economy, because we walked through a very difficult period in 2023, and then now picking up as to where we had stabilized the forex exchange and the inflation. So Q1 and looking at 2024, it actually looks good. So what you're just pleading is with the government to be able to ensure that we maintain this stability, and even mixing it now with this finance bill, that's what you're pleading with government, to be able to ensure that there is consistent and stability on our tax regime, so that we give businesses time to be able to stabilize and simplify the taxation. I'll give you an example of a tax which was adjusted last year, and it's just something that we are still monitoring, and it's behaving quite well on that development here. So on excess duty, last year the rate was reduced from 20% to 15%. And what happened within the 6 months, 1st of July to 31st of December, there was an increase in transaction volumes within banks of 26%. And this has resulted in a 10% increase in taxes that KRA has actually been able to collect from banks on excess duty by just reducing the tax rate. So KRA has been able to get 45 billion Kenya shillings within the sector, from 40 billion in 2022. And this result has actually just moved within the last 6 months, from 1st of July to 31st of December, because of the reduction in rate. So we look at it and see that an impact on taxes within the sector will actually affect even the profitability of the banks, because that's also another indicator that the economy is doing well. And as a Kenyan, we should be very proud of our Kenyan companies who are doing well, being able to turn profitability for investors, so that both investors, employees and government can actually be able to benefit here, because we can't get revenue if all our companies are flat or in the red. So we should be very proud when companies are doing well. We can be able to pay our corporate taxes, which is at 30%, which is very significant taxes that banks contribute. And generally for 2022, the numbers we have as a sector, we contributed 181 billion to government. So I'll say that we should, as much as possible as government, be able to ensure that we create a favorable environment for businesses to thrive, individuals to thrive, and then also banks will thrive, and that whole ecosystem will be able to contribute revenue to government.
Absolutely, and that's quite a significant amount. Which brings me to sort of like a conclusion of this matter. What are your alternatives? What are you proposing as alternative revenue sharing measures for government to reconsider? Because you've said a reduction and you observed and you sort of brought more. So what do you suggest? What are you suggesting to the government as alternatives?
Looking around all sectors of the economy, and even the economy as it is, because we are very much an informal economy as Kenya. So the solution to all this is just to be able to work on reducing the tax rates currently across board, and we'll actually be able to get in masses into the ecosystem. Just like banks, and looking around, without mentioning names, looking around at one of the top performing banks in Kenya, they have worked on numbers, masses, not increasing the fees or increasing the rates, but just working on numbers and volumes. And then now you can actually be able to see the significant revenues that some of the big players in the market can actually be able to achieve. So we are looking at that, and looking at your example that you've given where excise duty was reduced from 20 to 15%, and within 6 months, we have had an increase of 26% transactions. So that's something that if we work with government to be able to look in that direction, we'll actually be able to achieve more. And I look forward to that position where us within banks will actually be ambassadors for the government, being able to encourage our businesses and individuals to be able to do much more of what they're doing and pay their fair share of taxes. Not currently, like when we are trying to plead and be seen as if we are at loggerheads. Government wants to raise revenue, and then now we are saying no. It's just an issue of can we collaborate, be able to see within our ecosystem, using our data, to be able to improve the economy, because we focus on 3 things. We are focusing on increasing business activities within the ecosystem, and then also creating employment, and actually decent employment for Kenyans. And then ultimately, we also have a keen eye on the revenue that the government will actually be able to collect.
Okay. Could you tie this conversation or this question with what you're doing with the Inuka Enterprise Program, which you are supporting MSMEs to access bank credit? What further steps are you doing to enhance their capacity, competitiveness, and of course to also avoid the NPLs that we are seeing?
Now, yesterday we had a session as KBA where we were launching what you're calling a financial literacy campaign for Kenyans, and you're calling it Chora Plan. So what you're saying in this Chora Plan is we just want to, in a very intentional and very focused way, to be able to sensitize the Kenyan public, both individuals and businesses, to be able to plan well, be able to budget well, be able to have a keen focus on savings, investments, and then also prudent management of their businesses. And this we are doing it in partnership with the Central Bank, and actually we are happy that the governor, Dr. Tuge, was actually around yesterday, and he was our chief guest during the session. So what we look forward to is that collaboration between banks and government, because we also have KDIC, Insurance Regulatory Authority, also on board. There's also KMRC, which is dealing with house loans. We also have the Competition Authority. So we have quite significant partners, and then also Visa. In this ecosystem, where we want to get to the public, be able to get the discipline within the public, even as you get a loan from Fuliza, you get a loan from this Hustler Fund, you get a loan on your mobile, you actually have a duty to be able to repay the loan and the discipline, so that you can actually build your focus. So what you're doing with Inuka, it's a program which has been around, actually it's the same age, like my age in KBA, because I joined in 2018, and that's when the program began. So far, we've actually trained over 70,000 small micro businesses, just being able to formalize, transition from informal way of doing things to formality, so that they can be able to have accounts, be able to have records, and actually be able now to access financing. And then also, you remember in this country, we have about 7 million those micro and small businesses, and they employ roughly about 15 million Kenyans. So it's an area which is very big, and we can actually be able to create a lot of employment opportunities for Kenyans, and transition this country to further steps, and even widen the tax bracket, because we can only widen the tax bracket when we get more of the informal businesses, informal engagement into the formalities, so that we be able to work step by step with these businesses. And we have success stories where, like in Kakamega, there is one lady who was a porridge vendor, and currently now she's owning a very, very successful hardware in Kakamega town. So it's a journey, and we're also looking forward to working with partners like JICA, because there are very successful stories in Japan that have happened, also moving informal to formality, and then now you can create opportunities even for exports, even when you're a very small entity, but you can actually be able to generate products and services which you can actually be able to export. Okay. So yeah, in that sector.
Let me now move on to some of your key observations as we come to a close. One of the things is the housing market trends from your report, and I also know you had the Banking Industry Customer Satisfaction Survey 2023. Yes. But I want to start with the housing marketing trends. Yes. And there was a significant demand uptick within the low market housing segment in Q4 of 2023. Yes. What were your deductions from that, quickly?
Yes, from our report on the housing index, what we do is we collect data from banks on the housing loans that are normally extended to individuals and businesses around our businesses. So we categorize them in 3 categories. So there's low end, then middle income, and then the high end segments of the houses. So towards the end of the year, in quarter 4 of 2023, what we realized is now there was a very marked increase in uptake of the low income segments of the houses. And that just demonstrates that there was a high cost of living being affected across and felt across the spectrum. And then also there was inflation around that time, because as we had said, the exchange rate of our Kenya shilling was up and down. And also there was the aspect of the interest rates, because again, that's where that movement up to 13% for the CBR rate was finding its space there. So all those factors affected now the ability of Kenyans to be able now to afford the middle and the high level. So it pushed many of the homeowners to be able now to move to the low end section here. So that also plays around within the ecosystem on people having options when now we increase the cost of doing business, or when the price goes up, Kenyans will have an options. And the good thing with Kenya Bank Association is the aspect of relying on data, and also being able to carry out these surveys here. So that also is a marker to what's even happening in this conversation on the finance bill on pricing, costs. People are very sensitive on that, and there's a behavior change when that happens.
On the customer satisfaction, 2023, growing trend of customers maintaining multiple bank accounts. I don't know how you're responding to this trend as banks, and what are they doing to improve customer satisfaction?
That's also a trend we realized, in that there has been a growing number of our customers who are now multi-banked. So part of which also may just also play around on what's happening within the economy. Because again, as I said, we are net importers, and then also we do some exports. So around that area, you can remember the shortage of dollars. So what some businesses did was, hey, can I have, can I spread so that I have several accounts with the different banks, so that I can actually be able to access the dollars? Because I know that was a very significant aspect during that particular, for businesses, both small and even large corporates. That was a significant aspect. But also there's just aspect of this issue of the KBA. We promote a competitive banking environment. So Kenyans have actually options to be able to look at the market, and we also promote a lot of transparency, because on our website and also on the website of Central Bank, we publish what we call total cost of credit. So even for the loans, we have put all banks there, and what they're offering, and what are the rates, what are the charges. So anyone can actually be able to go there and be able to assess. So part of that may even make customers have some multiple accounts, so that when now they're looking for a loan, they have options. Because now you have a relationship already. So when you go, you look at how that total cost of credit is behaving. And so it's a trend, and it's also just driven both by Central Bank on transparency, customer centricity, in that, and then also Competition Authority comes in and says, hey, let's disclose everything. Let's be clear before the customer signs on the dotted line. The customer be able to understand what are the terms and conditions.
You're right. Finally, two parts of it, sustainable finance initiatives and of course the adoption of TFND recommendations. Your recent sustainability finance initiative catalyst, where it's highlighted various banks for their sustainable lending practices. I wanted to understand how, or the plan to further encourage support on sustainable financing. And of course I want you to combine it with the task force on nature-related financial disclosures, as the TNFD. The recommendations were recently introduced to the Kenyan market. What are you doing as KBA to support banks in adopting these recommendations? Those two areas.
We've been in this journey since 2016 with our member banks when we started this sustainable finance initiative. And this is what we made us to be able to get involved at that early stage was on the aspect of, other than just focusing on returns to our shareholders in terms of making a profit, we looked at that aspect of focusing on the environment, then also the social aspect within the community we live in, and then also the governance structure. So the ESG framework, even when it picked momentum in Kenya, we were already on that particular journey with our sustainable finance initiative. So we developed principles which we disseminated within all our banks, and we've been doing that training since 2016 up to now. And even on that journey, Central Bank has also come in and also put guidelines on how banks can report on climate-related risks within their ecosystems. And what we're focusing on is, as we look around within our environment, we are seeing a lot of climatic changes in our environment. We've seen floods recently, we've seen droughts, and even seen our temperatures going to levels that we haven't actually been able to experience. So all this, we look at them and then now we assess as to which areas we need now to be able to channel our finances more to be able to ensure that we have a sustainable planet into the future for the generations to come. So this framework, and even now tying it with the task force on the nature-related financial disclosures, is also just goes that level of being able to look at how banks financing are going into activities that are affecting nature, climate, because that's a conversation that all of us within the ecosystem, and as I said, banks will bring everybody together, and financing is quite key to be able to see which areas you need to promote for sustainability. And then on that level, and the Sustainable Finance Initiative, we've been able to train close to 50,000 bank staff within our ecosystem from 2016. And I'm happy that even for those who have left the banking sector, joined other areas, they are ambassadors to be able to spread that particular message. So we are big in it, and we keep supporting banks to be able to assess, measure, and even put in management practices just to ensure that in our financing, where we are putting our resources, we are also cognizant of the fact that we should not destroy our environment.
Thank you so much for your time, but I want a quick one answer from your end. Are you optimistic that your recommendations on this finance bill will be listened to?
I'm very firm, both from the committee on the finance and national planning within the National Assembly. Having appeared before them, I'm firm that yes, indeed, not all, but on VAT on financial services, that will be listened to, because it will be an area of great pain, and they have listened, and I'm very, very optimistic and still confident that it will be a great.
Let's wait and see. Thank you so much, Raymond, for your
time.
Thank
you, Maina. Thank you so much, and welcome.
There you have it. A conversation with Raymond Polenje, the acting chief executive right here at Kenya Bank Association. It's a wait and see to see what will happen on their recommendations, especially on the bill. Thank you so much for your time. I'll leave you now with the markets.